Well, good morning and welcome to Moneycontrol live stream. You're watching IPO Watch with me, Nandita Khemka. Well, it's been a blockbuster year for IPOs, 2025, right? And the action isn't really slowing down anytime soon. Today, we are putting the spotlight on India's largest actively managed mutual AMC, ICICI Pru AMC. Of course, it has drawn strong interest from investors globally and domestic as well, given the fact that we've seen the company raising as much as 3,000 crore rupees via the anchor book. It's a 10,600 crore mega IPO, and in fact, if you look at some of the anchor investors, marquee global names like Fidelity, Government of Singapore, Temasek, JP Morgan, the who's who are on the list, and even from the domestic end, you have the names like LIC, HDFC Mutual Fund, SBI Mutual Fund, the list goes on. Of course, joining us today right here in our studios is Nimesh Shah, MD and CEO of the company. Nimesh, welcome to Moneycontrol, and congratulations for your IPO. Great interest from marquee names. Tell us first, the AMC industry itself has grown quite substantially, right? Right from 24.5 lakh crores in FY19 to somewhere around 77 lakh crores in 2025. A compounded annual growth rate of somewhere around 18%. Do you expect this pace to sustain going forward? And where do you see assets under management heading over the next 5 years?
This is the exact, when I'm in the IPO phase, this is the exact thing that I'm not supposed to answer. Right? I can't give future looking statements. But what I would say, what has driven the business over the last 7 years, as you said, 18% growth.
Yeah.
I think it has been done very well. The quality of growth is very important because the growth is now coming from SIPs. If you see the way the SIPs have grown, that has been very beautiful. So and when you speak, because of this IPO, I spoke to a lot of foreign investors, as you said just now. So when I was speaking with them, I realized that the way they are looking at this business is very simple. They are looking at this SIP numbers very closely. Not a single, I must have done 100 roadshows, not a single roadshow I have not talked about, they have not asked about SIP. So they look at, they calculate, they don't know, they did not see only our SIP numbers, they wanted to understand our STP numbers also. So that's what we have given in this one also, that if this industry, if you add the SIP and STP numbers, and which hits every month, and multiply by 12, that itself give you a growth of around, so it's a good growth number only coming from SIP, STP. Another driver of growth in this industry over the last 7 years has been the mark to market, right? How much does the market give you? Now the AUM of this industry is substantial. On that, if the market grows, the AUM will grow itself, right? So two things which are very, very fundamental for the growth in the last 7 years is the rate at which your SIP book is growing, SIP plus STP book is growing, which is a very healthy number, and then market growth. Both of them put together has given a very healthy 18% growth over the period of time. So those drivers are not different. People ask me, what are you going to do different in the next 5 years? I'm not going to do anything different for the next 5 years. Whatever we have been doing, this is a very simple business. You get money, you manage it very, very carefully. If you manage it carefully and people have got a good experience over you, they give you more money. Yeah. So I don't know how much to strategize on this. The only strategy should be managing the money well. If you manage money well and people make money out of you, you get money, right? You have got a brand, say in our business, you have got a brand like ICICI. You have got distribution across the country. So with all the pillars in place, you have to focus only on one thing. In managing money in a risk-adjusted way, you are done.
But in terms of value, in terms of your next milestone, what would you have in mind? Because your quarterly average AUM has topped 10 lakh crores. You have 15 million big customer base as well. So what would be in terms of your next milestone?
There is no milestone in mind, except that today we can say that 90% of our money has beaten benchmark. I have to focus only on one milestone. My dharma is to beat benchmark. Right? If I beat benchmark, everything else will fall in place. Right? Then the people will invest in active funds, people will not invest in it. But if we don't beat benchmark, whatever strategy I talk about will not work. Right? So the only focus for this company should be only investment centric AMCs work over a long period of time. So that is where we should focus on. We should be we have been investment centric. We should remain investment centric. Everything else will fall in place as it has fallen in place over the last 25 years.
I'll ask you one follow-up question to the first question that Nandita asked, and why that question is vitally important, Nimesh. agree to the fact that, last 6-7 years that we've seen, especially post-pandemic, has been driven by two remarkable things. One is the growth in SIP, second is also the market performance. Now, that's given you an 18% growth, right? How do you see this going forward? Because one of the worries that we've had in the entire financial market ecosystem over the last 2 years is that will the retail participant who is coming in going to really stick? And in the last 2 years, of course, there is no evidence that they are going away. It looks like a secular trend. But if you were to just look at your overall AUM, especially the equity AUM, how much would you say, what proportion of your AUM would you say is cyclical in nature? In some sense, breaking it up into sticky SIP audience, as you see it, versus a tactical HNI audience which comes and goes, because there is a huge pool of high net worth individuals who also invest in mutual funds, not only in alternates, because they see the performance and the low fee and the transparency and come to you. But those guys also shift tactically every year. So what proportion of your business, to sum up, would you say is cyclical?
As long as the sales has been responsible, right, there is a certain delivery that we can do, which will be benchmark plus, say, means it's not that if the benchmark is going to go down, I am going to make great returns.
Right.
We are benchmark driven. We are a very benchmark conscious industry.
Right.
We have to beat benchmark. So as long as sales has been done responsibly, and I'll give you examples of that. I will not talk only philosophy. As long as sales has been responsible, there are no redemptions. It's how sales has been done. If somebody has been told, see, past return has been 40%, why don't you put money in this? Or somebody has gone online, seen last 1 year return and come into, they will be disappointed, right? Because if something has gone up and you get into a fund which has done very well in the last 1 year, and based on that only you got into a fund, you will be disappointed. So those people will get disappointed. I'll give you two types of SIPs, right? One is an SIP which is goal-based, that you are investing for your daughter's education.
Yeah.
You are investing for your retirement. There won't be redemptions. But SIP which has been based on this fund has done very well, this sectoral fund has done very well, let me start an SIP on that. We have been talking about mid-cap, small-cap still quite some time.
Yeah.
That mid-cap, small-cap, if you do, and based on the past returns, and that can disappoint.
Right.
So some of the irresponsible selling based only on past performance, and if the customer it does not meet customer expectations, there can be redemptions or there can be decrease in the increase. Right? First we'll see a decrease in the increase. If the market remains the way it is, you can see a decrease in the increase. But the debate within the company also, we have had these debates. There will be a decrease in the increase, and then there can be a decrease on that number also. I said I would have done 100 roadshows only talking about SIP, whether it is sustainable or not. Can there be a decrease? Can there be, because the irresponsible sales of SIP can come down. It is not that it cannot come down. So if that part of it comes down, the question is how much will be that be? It is not that major an amount, I feel. Can it come down? Can it come down slightly? But I don't feel it is a dramatic change.
What would you say? I mean, is it a 5% cyclicality, 10% cyclicality? What is... You were talking about mis-selling. I'm
not saying mis-selling. It can be mis-buying also. There are
mis-buying also.
There are a lot of people who go online, just see the last 1 year performance and come in. So those people will disappoint. So
both.
Maybe 5 to 10% of that can happen.
10% of your AUM, you're saying could be subject to...
I'm saying that if SIPs, we are talking about SIPs, so SIPs which have not been sold responsibility or not purchased with the complete knowledge can come down.
Right.
That's all I'm saying. But we will be adding more also, right?
Fair enough. So that is SIP. I'm asking also about the lump sum amounts.
It's the same. Mutual fund is the mutual fund. But what happens? There will be redemptions, there will be more selling, so ultimately net can become zero also. Or net can become slightly negative. That's all I'm saying. It's not going to make a dramatic difference. That's all I'm trying to say. Because every month we sell and every month there are redemptions. So sometimes, lot of months, normally the last 10 years we have been seeing sales have been positive. But there will be some months where sales can become negative.
Fair enough.
Okay, so you've established that, SIPs, retail, that's been the growth engine when it comes to AUM. So, say last figure for SIP was 29,000 crore rupees for the month gone by. How much of that share, how much of, ICICI Pru share would be there?
So the way we look at ourselves is that I have got SIP plus I have got STP. So the total of that is some 4,800 crores plus. So 4,800 crores, I multiply by 12, I'll get every year.
Okay.
So that is more than 9% of my equity AUM. So 9% of the growth can happen only out of SIP plus STP. That's how we look at business.
Fine.
So there are three drivers of the growth.
Sure.
I won't say any numbers, but I'll say the drivers of the growth. How does our AUM increase? One is SIP. I said 9 to 9.5% is what looks like today. Then there is a mark-to-market growth, right? That also grows our AUM. And third is what we sell. So it's a mixture of three. So if the markets slow down or if the markets don't perform, the mark-to-market growth is not that high.
Yeah.
The SIP continues. That's all I'm saying.
Sure.
Okay. Fine. So, let's also talk about competition and what really sets you apart. You're head-to-head with players like, HDFC, SBI, etc. And there's competition from fintechs as well right now. So, what is it that sets you apart?
So more than competition, I'll say there are other players also. We all are in the business together. We all are good friends and we are growing the industry together. The way we have looked at our business is that we have always ensured that we have diversified our assets into many styles of making money. There are a lot of ways you can make money in the market and there is no wrong way or right way as long as you are doing. So what we do, there is a contra style of fund management. So we divide all our products into various fund managers. We have got 15 fund managers in the company. So we divide our AUM into various fund managers. There are different styles of making money and different styles of making money work in different market environments. There was a market environment between 2016 and 20 where value funds would not do well. So my fund manager who's managing the fund in a value style did not do well in that phase, but the other fund managers did well. So you diversify your styles of fund management. There is a growth style, there is a value style, there is a quality style. So there are various styles and we allow each fund manager within the framework given to manage money in his style. So that's how we are different. Another thing we have done is that we have established an alternative business which is into PMS. We are quite a significant PMS. We do international advisory. We are into real estate business. So that business also we have been able to scale up. And we are we operate within a framework that whatever we do has to be right for the customer. Whatever we do should not give undue risk to the customer. That is why. And third is that it should be profitable. In that, how we are different, 1/3 of my assets are actually dynamic asset allocation products. That means I have mixed equity and debt and created a hybrid product. There my market share is more than 25%. Because that's the stable. When I say mutual fund is for a retired school teacher, when in our mind we should be very clear that a retired school teacher, if he buys this product and he stays in it for a reasonable period of time, he should have a good experience. So mutual fund risk management is done in that manner. Mutual fund is risk adjusted, the customer should make money. So in a year like 25-26, from September 25 to September 24 to September 25, there were no returns from the market. But my hybrid products made money. They made money from 4% to 9%, right? Even because when equity didn't make money, metals made money. When equity didn't make money, debt would anyway make money. So debt I always use as a shock absorber when you are running the equity trade. That works. So that's how we are different. And we have been a very in bottom line focused company also, if you see overall.
True. Nimesh, on alternates, amongst all the AMCs, you're the one who's really scaled up in the alternate space very well. Tell us, what do you see over the next 3 years? More importantly, what is the yield differential that you can create through alternates? Because that's obviously the more profitable part of the business, because the regulators are also more benevolent and they allow you to charge higher fee there. The second part is now as part of your...
Higher or lower also. We can say that I don't charge any fee, I'll take profit
pay for
share.
Alpha kind of thing.
If you make money, I make money.
Right.
That also can be done in the alternates.
Right. So how do you see first of all, what is the scale-up plan for alternates? Second is, how does that really change the complexion of your portfolio, of your profitability going forward?
Your question is very appropriate. Most of the analysts ask me this question. And I told all of them that I don't know, right? I am managing money, right? So on the equity space, if we do a good job, our business has grown because the customer also benefited. He gave more money. So I cannot, in this business, unfortunately, you cannot plan. On the equity side of the business, you cannot plan completely. If the fund performance does well, then you get money and people will build on the portfolio. There are already huge number of investors. If they make money, if they make and they are happy, they'll keep on increasing their allocation to those PMSs or AIFs. That is one part of the business. But the second part of the business where my focus is the commercial real estate. Commercial real estate is a good business for an AMC. Risk adjusted, it's a very good business because you are buying a ready-made building. There is no construction business. It is already given out on lease. So there is lease rentals which come in. So commercial real estate business is something that we want to focus on and make it as good as our equity businesses, where and this is for HNI customers where they put in more than 1 crore of rupees in the AIF space.
Right.
So I think every HNI anyway invests in properties. So that property, commercial property can be done with us. We can leverage for him. We can give it out on rent for him. And then it's a very good structure. So I believe that business is much more scalable with the risk levels that we have in mind.
Okay. And how big do you think that business can be over 3 to 5 years?
I really don't know.
I'm sure you have a target.
See, in AMC, frankly, you cannot work with a target. And this I have told to all investors who have invested also. You cannot have a target-based thing. You have broadly in mind that if I'm spending so much money in creating this vertical, then if I have this much money, I'll be breaking even. Beyond that, you really don't know. But there is huge potential. That's all I can say. That's what I feel.
Right. So, what about the private equity space? Is there anything else that you intend to do in the private equity space?
Because we have applied to SEBI.
Because ICICI private equity ventures will now be part of the AMC, isn't it?
Subject to regulators' approval.
But
so the stage
I think the market is assuming that that's going to be your forte.
We'll wait for the regulator's approval. If the regulator approves, then it can become part of ICICI Prudential. We are buying out those funds from them and the fund management team.
Right.
If I have to set up a business today, it will take me 5 years to set it up.
That's right.
The good thing is, if I'm buying it from ICICI Ventures, there is a good team which has got a track record of almost 15 years.
Yeah.
So I'm getting that team with me, and then we can grow the business over here. We are focused on that. We can be focused on that business, but it will operate as a separate unit within ICICI. So ICICI Prudential AMC will have 4 spaces. One is the mutual fund space. One is the alternate space, where relatively more risk than the mutual fund. But HNIs will be informed about the incremental risk that they are taking. Maybe more concentration risk can be taken over there. Third is the private equity business if it comes. If I get the SEBI approval.
Right.
And fourth is the ETF business, which we are already in, which is low margin, where our focus is on to become as good as the #1 player in the country on that.
Sure.
We are not market leaders over there. Somebody else is the market leader.
Sure.
We need to do that business better.
Sure.
Okay, let's talk about the regulatory environment as well, right? Much has been talked about how there's pressure to cut brokerage fees and there's just changes when it comes to TER as well, right? In such a regulatory environment, would you say that, it's only for large players and scale to sustain? Is that something that could take place as a result of these regulatory changes?
Regulator has been very responsible even towards all the players. They have given more license, and actually people have shown whoever has done well for the investor has got AUM. Look at the other mutual funds which have grown, right? I'm not naming anybody, but there are some mutual funds who have really grown. But look at their track record. They did very well for the investor. They got a lot of money. So you have got in the last mutual funds who have come in the last 5 years and have collected more than 1 lakh crores because their returns were out of range. So new players bring in a lot of variety. They bring in new thought processes. They bring in new ways of managing money. And it is very good that SEBI is getting new and new licenses. I think it is such an under-penetrated industry that the new players coming in will only grow the business.
Okay. But is there a risk of shift towards passive investing much more, or?
Passive is linked to whether I beat benchmark or not. I'll come to the same tape again, that if we beat benchmark, passive, people should invest in passive if active is not beating benchmark. As long as we are beating benchmark, people should invest in active. So that is why if you see last year, retail investment in passive or ETF has been relatively less. Out of if 100 rupees has come in active, in the year 24-25, 6.25 rupees came in passive. Right? That's because active is beating benchmark. If we don't beat benchmark, so the risk in this business, I'm re-emphasizing and underlining it, risk in this business is not market, is not TR, it is not risk. Risk is only one thing, our performance. We should perform well. If we perform well, we'll get money.
Okay. Digital onboarding and eKYC, they have also brought millions of first-time investors into the fold, right? How are you leveraging ICICI Bank's ecosystem and your distribution network as well to deepen penetration beyond metros?
See, it is automatically happening with all this because even in a small town, mutual funds, in my mind, change everything, right? The penetration, somewhere that at the right time he hit the nerve, and then SEBI facilitated that with online KYC possible and everything. So from remote parts of India, the B30 business as we call it, beyond 30 cities, that is growing, and that capability is there in a small town with which does to directly reach mutual fund. So that is there. So growth is happening in the smaller towns also. But growth in the bigger cities is also happening. It's growing everywhere. See, we talk about B30, but if you BKC, if you are sitting in BKC, 3 kilometers from BKC is Dharavi. Right? And there is a lot of under-penetration even in Dharavi today as we talk. And Dharavi, it's not that Dharavi, they do serious size of SIPs. You will be surprised if you see the size of SIP. You should do
Is
one
it? Give us a sense.
Huh?
Give us a sense.
My son, I'll give you a real example. 5-6 years back, my son had done a camp in Dharavi of promoting of investor education in Dharavi. And people, then the AMC went at some point of time to get the application because there were no distributors in Dharavi. So there were serious, it was not 1,000 rupees. Each one of them was looking at a SIP for their education of their children. The most people came and they liked the idea, create an SIP for their children and serious amounts. They were looking at what will be the corpus. Nurse बनने के लिए program का इतना है, तो how much should I invest today? They were working through that calculator. So it's because see, they were thrilled after 5 years when you went to meet them and when they saw the statement, they were thrilled because otherwise they invest in...
Changes life for them.
Otherwise they are very happy that they got their money back. Forget anything else because sometimes they invest in chit funds over there and they never get their money back. So I think investor education is as much required in urban India as much as rural India. We have to do both.
True.
Sure. Last question really from my side in terms of your valuations. I was just going through your financials, return on equity in excess of 80% already, right? So how much room is there to grow from here in that sense, just for the benefit of our
return on equity in this business, there is only one word which is important, operating profit, right? PAT, it is not PAT, it is operating profit. Operating profit is the mantra. That is because PAT is dependent on how much net worth you have. If you have more net worth, you will have more other income. And there is no point in multiplying other income also by the PE ratio. Otherwise, if you have got 5,000 rupees in your 5,000 crores in your balance sheet, and on that you make 300 crores of other income. If you multiply 300 by 40, then you are actually valuing 5,000 crores at 12,000 crores. So only figure important is operating profit. We have got a good operating profit. Our market share in operating profit is around 20%. And I think we are more or less, we have left a reasonable amount on the table. Numbers I'll let you calculate. But operating profit vis-a-vis whatever, the industry has got a good PE ratio. Because look at the last 7 years growth. I'm not talking about the last 2 years growth. Look at the last 7 years growth. Last 2 years looks very high. I don't think that kind of growth should be because on the long term it will stabilize. So last 7 years it has been 17-18% growth of the industry. So because of that high growth potential, and I said the PE ratios of this industry will be relatively higher and no capital required. Why is RONW higher? In fact, RONW can be double of what I told you. Right? I have to just, if I pay out more dividend to the, we have always paid out, if you see the track record, our dividend payout has always been more than 75%. So if I have got some 1,000 crores in the balance sheet, if I pay out further, right? Then
even higher.
My other income will become lesser, my PAT will become lesser, but my return on net worth will be very high. So return on net worth is, because there is no net worth required. Actually the business return on net worth should be infinite. But here we require money only to invest for the skin in the game circular that I have invested some 1,500 crores in various schemes of mine. So that is the net worth required, otherwise you don't require that.
Sure. True. So your point that, you have a 20% share in operating profits in the entire pool, the industry pool, and you have a 13% market share, correct? So now that is already disproportionate. Your share of the profit pool compared to your share in the market is already high. Is it sustainable? In everything, there is some sort of a reversion to mean.
See, that the profit share depends on how other people operate. If other people operate more...
Part of it is because, somebody may be, managing pension funds or, government pool of funds, which is where the yield is very low.
In this business, we keep on investing more in the business. And as we invest more in the business, maybe the cost income ratio goes up. But look at the absolute profit, it will grow. No? Even if the cost income ratio goes up going forward, the absolute profit will grow. As I said, even if the margins are, as I grow, my margins are coming down. Nothing new. If you see the last 3 years on the mutual fund side, every year
profits growing.
My bips are coming down by 3 to 4 bips, which is serious. Right? Every year mutual fund bips, because benefit is passed on to the customer so there is a SEBI formula to that.
True.
And every year that happens. So I am quite okay because the volume increases. I started off with that. I am going on like a tape on that because the bips will decrease. As SEBI formula is clear, as you manage more money, your bips will decrease. So yes, that it can decrease. Others will become more profitable, so my market share will naturally come down in that.
Right. Okay. One last question. Prudential is selling about 10% stake. They have another 15% to sell.
They'll have another 12. They have already sold 2.5%.
Right.
12.5%. They have another 12.5% to sell.
Okay. So on behalf of your promoters, I should not say promoter, at least one promoter, what do you have to say? Can you give some sort of a assurance that they will not sell at the price that they are selling now?
First thing,
because every time there is supply overhang, it is an overhang.
I'll talk about...
Right? Like today the market is very buoyant. You have good credentials. Everything's looking good. We don't know 1, 2, 3, 4 years down the line you don't know how the market's going to be. And the supply is not something the market likes at all. At this point in time, it might not be a big concern, but what do you say?
When I went for roadshow, look at the quality of investors I've got. Look at the foreign investors and the local mutual fund quality I have got. Look at how much they own in my other mutual funds in the country. I think in capital markets in this business, there will be more than sufficient appetite. How much I have been able to give my other mutual fund friends in the industry? In the anchor, I have been able to give only 1,000 crores to them. An industry of 50 lakh crores, how much did I give to them? 1,000 crores. So this 12.5% is not that big in the overall scheme of things. Our denominator is huge, right? This 12.5% is nothing according to me, the way I look at the market. And international investors, $1 trillion funds, I have given them 40 crores, 50 crores, right? That is $4 million. It was very embarrassing to tell them also how much we are allocating to them. So my experience is that there is sufficient demand from long-term investors. If you look at the quality of my anchor book and what Prudential has sold as pre-IPO, they have only taken institutions with deep pockets who would like to invest big time. There are pension funds in the country which have grown. If you see my, in the anchor book, we have also allotted to pension funds. Huge pension funds, I have given them 45 crores. Right?
But tell me then, why did they not consider, selling the entire stake? You could have pleased everybody, given them higher allocations, the markets are really happy.
We'll have to ask them. Right now, I have been given a mandate, 10% IPO. I am the CEO of the company. The shareholder has decided to sell 2.5% in pre-IPO at the same price as IPO. The one shareholder has decided to sell to another shareholder 2%. Yeah. So they have sold 4.5% at the same price as the IPO price.
Fair enough.
Beyond that, I don't know.
Right. All the very best, Nimesh. It's been a pleasure talking to you. Thank you so much for your time this morning.
Thank you.
Thank you. Thanks a lot. Well, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates. And we'll see you with the markets at 3 p.m. Thank you.